Hey guys and gals, this is Blake Morrow. You are listening to the Daily Roundup webinar. Sorry, a minute late. The timing sometimes of people is crazy. As soon as I go to do something, somebody else does something like right at the. Anyway, somebody came to our house like just as I was about ready to start the Daily Roundup, so I had to let them in. Sorry. Actually, somebody into the backyard. But anyway, I hope everybody's having a good trading session. It's actually really quiet. I'll be the first one to admit I'm a little frustrated today. I got up this morning. Let me tell you what I did and kind of what I'm doing now. Well, right now I'm actually just kind of standing aside. We were in the chat room, just talked about the dollar Canadian popping back above, 131 because it wasn't selling off, and then as the stock market rallied, it looked like it was stalling. As soon as it stalled, the dollar Canadian just kind of squeezed. We've pulled back again due to stocks pushing up again, and so that's pretty much it. But I bought earlier this morning, like way early, like earlier, like when I got up. Actually, overnight, I got hit on an order to buy some Aussie yen right here at the 76.30. It wasn't big because I split it up into two orders. I bought a little bit of Aussie yen and I bought a little bit of New Zealand yen around the same time, somewhere down here overnight. Anyway, when stocks started to sell off and the S&P broke the 3,600 level, I pulled the plug on those trades, because the S&P was kind of breaking below 3,600. So I pulled those trades and I said, "Damn, I'm gonna get out." So I got out of the Aussie yen, like somewhere around here, and I got out of the New Zealand yen somewhere around here. But I did buy the U.S. dollar Japanese yen at the 618. So I kept the dollar yen because I knew we were at the 618. I sold the Aussie yen, sold the Kiwi yen, took a little loss on each, and then the dollar yen popped up to 24, and I sold it at 24, which is good. Made up for a little bit of my losses here, but now I'm just like, what do you do? It's frustrating because the market's really not doing a whole lot. I figured when we broke below 3,600 in the S&P, this move here triggered a lot of shorts and probably a lot of longs to get out. Look, I got out of my Aussie yen as a result. We started to break down. I'm like, okay, I need to get out of this thing, get out of my New Zealand yen, because I thought those commodity currencies would come under pressure. And then we pop right back up above 3,600, squeezing all the people that got short or people that got stopped out, to turn them around. And then we rally back. So the question is, what do you do now? And the answer to that question is, I'm not really too sure. I can't be bearish equities right now, but at the same time, I'm not like super bullish. And so I'm struggling with a couple of things. Let me kind of share with you guys what I'm struggling with right at the moment. The market's extremely bullish, right? The market's extremely bullish. I think I mentioned it on the Face webinar. I was reading a piece from this Bank of America analyst. Says, here, I'll read this to you guys. I'll read it. FMS cash levels sink to 4.1% from 4.4%, now below the pre-COVID-19 level, was at 4.2% in January. Close to triggering the FMS cash rule sell signal occurs when cash is sub 4%. So basically, it's just saying that the market is extremely long and extremely got all their money to work for the most part. I mean, for argument's sake. So the market's extremely bullish. We're at all-time highs. So I'm a little nervous about being on the long side of risk. That was already, kind of my issue with the Aussie yen as it was. But at the same time, I know we're heading into the season of the year where everybody wants to be on board, regardless of you know, regardless of how much cash is being deployed right now, you don't want to miss the boat either. If you're an asset manager and you've got, a month and a half left to be involved in the markets for the year, do you go full board? You know what I mean? So, and then the other half of me is like, well, this is a train wreck waiting to happen. So do I really want to be short risk? Don't. But do I really want to be long risk? I don't. You know what I mean? So I'm just kind of telling you guys like my feelings right now. And Trade Journal said, but the risk reward I feel isn't great. That's what bugs me at the moment too. Yeah, I agree with that. I don't think that the risk reward to be long is great. So I think what I'm going to be thinking, see this pink line right here? So that comes at 35.80. If we dip down to 35.80, you got to be on the long side of risk, however you decide to play it. Short dollar Canadian, long Aussie yen, whatever your the trade is that you want to be. I think if we get below 35.80, things get a little dicey for the market. So I think that's how I'm going to approach it right now. I do know, oh shoot, I didn't want to do that. Damn it. I keep deleting things that I don't want to delete on my chart. So let me go ahead and draw that back on. Sorry. Excuse me 1 second. So one of the other things that I do want to do is I really would like to be long the Euro Swiss. This was my chart of the day yesterday. Okay, it was my chart of the day yesterday. I do think we're going higher. I think that this is a good opportunity. Hold on 1 second. I'm getting a phone call. This is a good opportunity to be short Swiss francs, long Swiss or long the euros. The question is on this particular pair is, do we get a dip before a breakout? And that's kind of where I'm at. It's like, okay, I'd like to be a buyer here before being long. Obviously, if we break out, we break out. I mean, if we take out this trend line, then you gotta just start thinking, okay, we're gonna go see 110. I'm hoping we dip a little bit. I want to be long on this dip. I'm waiting for it. You know what I mean? I think what the way I'm going to approach it is, just kind of give you guys what my thoughts are here, because I've already got an order out and I'll probably put out a couple orders. So I want to be a buyer here at the 24% retracement, at the 38% retracement, add a little bit, and then put my stops below here, below the 50% retracement. Because then if we break below the 50% retracement, we're probably going back to the bottom of the triangle. And then I don't want to be around for that. I can try to play it on the long side once again down here. But I'm thinking about, I have an order out right now at 107.90, I think. 90, yeah, 107.90. I'm going to put another order in at like 107.65. And then, try to get a decent cost average on a dip down to 38%. And then put my stops below the 50%. That's kind of what I'm thinking right now. Another thing, I guess I should talk about too, is I know we're in the right season. We're in the right Santa Claus rally season. We do still have a couple weeks between now and Thanksgiving holiday, which is, I'm sorry, it's next weekend. Not this weekend, next weekend. Yes, it's about a week and a half, where we could have a little bit of a pullback in risk before we get like that Santa Claus rally. So, I think the Santa Claus rally is somewhere between, beginning of December and the end of December. So could we, because the market is so aggressively long, could we get a dip like this down to like the 3,500 before we rally into year end? That's another thing that keeps popping out in my head, and that's why I am a little nervous about being long risk. So Amira said, hey, Shalom, Blake, you not start. Oh, sorry. Yeah, I was running a little late. Amira asked for the IWM. Let's take a look at the IWM. I'm not super excited about, like, I think you got a good idea of how I feel about risk. But hey, if stocks move higher, is the IWM probably a better option right now? Sure. I mean, look at these mid cap stocks. They look bullish. So, I mean, if you're going to be long risk, this is probably the place you want to be, and you don't want to be in NASDAQ, right? So anyway, it's pretty choppy out there. I'm just kind of giving you guys some ideas of things that I'm thinking about. I'm not. I can honestly say I'm not super excited about things. We were talking about in the chat room. We were talking about the dollar Canadian, being pretty well bid, which it is. It's actually bid up pretty well today. The dollar Mexican peso is trading a little heavier, and you guys know I got out of like my short risk trades earlier today because I'm just a little nervous about being short risk, but at the same time I'm not comfortable with the market. But one of the things that Mark in the chat room, he said, hey, hopefully the dollar Mexican peso gets a little bit of what the dollar Canadian's having right now. And I said, the only thing that's really going to rally the dollar Mexican peso is if stocks come down, because if stocks come down, this is a high yielder. So this is the one that will respond the best to the upside. But stocks do have to come down. So in other words, I think 35.80, if that is breached, the dollar Mexican peso will do well as a result. But until then, it's kind of off my radar, and if stocks continue to go higher, whether it's the IWM, the S&P, the NASDAQ, everything starts moving up, then that dollar Mexican peso is at risk of breaking 20. It just is. So guys, I want to thank you all for being here on the Daily Roundup. Thank you for always supporting ForexAnalytix, because I appreciate each and every one of you, and I know the rest of our team does as well. If you're listening to this after the fact, try us out. It's only $1 for 10 days. And then not only do you get this free webinar, but you get, you can join in the chat room while you're on trial, trying it for the 10 days, download the mobile apps. So for the rest of you guys that are listening in live, thank you again. I will see you guys tomorrow morning on the Face webinar. You guys all have a great one. Thanks, Brock. See you guys.